Folks, Black Bull Markets have 10 merch packs to give away to clients who sign up before the end of the year, including one of these trader keys. So to go in the draw, all you need to do is sign up with the link below this video or in the podcast description, and you'll go in the draw to win. It's that simple. And remember, folks, when you sign up to Black Bull Markets through the Trading Nut link below, you're going to get a 100% deposit bonus up to $1,000 on your first deposit. All you need to do is click the link in the description below the video or the podcast.
Good morning. How are we? Good morning. You guys, you see my screen all right? Awesome. Alrighty. So there was no stream yesterday. And we had interest rate decisions. So I did a New York one just with my group, and it wasn't very good, to be honest. So this is the interest rate decision on German 40. I missed this. I didn't get there in time, where it bounced off of the below London low, and we had a nice little level to the left. And then it was just straight up, and I was kind of fighting this, trying to find this sell, and got into a sell, and it went. I was targeting New York 50% at that time, so it goes up about 40 pips, and I was going to secure like literally here, and I saw it bounce, and I was like, oh no, because I was hoping it was going to go back down then, but it could see it coming, just went all the way back up and stopped me out for break even. Then I got into another sell later on, and then I was just caught in this range, and I was just taken with German 40, thinking that there was going to be some good movement after the interest rates, and it was just nothing. So I got held in here and eventually just closed out for like very, very minimal profit at all. Minimal. Then annoyingly, overnight came down to the target. So, and whilst all that was happening, I didn't look at NAS last night, and NAS gave some awesome moves. So same time that I was getting into that sell on German 40, NAS went and dropped 210 pips. So disappointing last night. Really hate interest rates when they come out. Sometimes they're good, but most of the time the price action just sucks. I'm almost thinking just skipping them. It's not worth the headache. Anywho, we're up to a new day now, so looking forward to today. I don't really. Oh, wait a second. Sorry, guys. There we are. Sorry, mate. Yeah, sorry, Richard. That would help, wouldn't it? I had my screen covering it, so I didn't see. Alrighty. So better try again. Good morning, Samuel. PVP. Good morning. Yeah, sorry, Richard. My mistake. Me being a goose. Alrighty. So Friday, Freaky Friday today. Let's do. I'm not going to look at NAS. I'll do that for New York session. I'll look at German. I'll look at gold. There's not a whole lot going on, so I might even look at something else. I might look at something like Euro Aussie. Anyway, so my levels, I don't really have any. So on the daily, we had been for basically since the last half of December. We've just been moving down. We came up. We rejected from this wick. We pushed it down, made a new low, came back up, then rejected from this wick. Then we pushed down, made a new low, and now we're pushing up. And we've had some pretty strong week. This week's actually been really, really strong for German. So it's kind of like going with the back end momentum from last week, and we've just seen it just rally. Now. The tricky thing is for me is I listened to that press conference and Christine Lagarde, she didn't say anything really, but then the market took it as pricing in that, yep, we've got rate cuts coming, two of them before summer. And I didn't see where that's come from. I didn't see where it's come from. So that's where I got stuck in my bearish bias, kind of trading what they were basically saying they're going to hold rates as long as they need to. But I think that's me logically speaking. The market just does what it wants. So they pushed up and we actually had an inside day. So like you can see, this is the high of the previous day on Wednesday and the low. And yesterday, even with interest rate decisions, it was an inside day. So we've still got this wick to fill. But now it's a little bit choppy. So on the 4 hour, we had been contained. Like this is where, at least we're not inside this area. That's the area I didn't want to be inside of. This is that nasty zone. And this is where I was a little bit disappointed that I missed those buys going into New York session from this level. Because we've spoken about this zone all week. So we started the week off and we were here. This is where we started the week. And we did get a nice little sell from this area. And then once price broke through, there was going to be a nice clean push up. And we got little buys up in here. Then price gave a little bit of pullback. And then it's just been rallying since. Once we closed above here, we went up to the next zone. Then we came back down and we retested perfectly. And I missed that opportunity timing wise. Now, what are we going to do? That's the thing. What are we going to do in this zone? So on the hour, this is where I was wanting to come back to last night. This is where I tried to get in. Left a lot of profit on the table. Then there was just no momentum. And now we're just stalled here. So I would like to see this area filled. I'd like to see that area filled. We don't really have any news today again. So we do a New York session. We've got core PCE. So this is going to be an inflation measure. And they're forecasting some decent, it's actually dropping quite a lot. So they're forecasting 0.2%. So the previous was 0.1, but the anniversary of this, and the anniversary, like when you think about inflation, is it slowing? This is month on month. So this is just comparing this current month, well, the month it was to the previous result. But if you're looking at year over year, what the Fed are looking at is, are we at 2%? So even though they're forecasting a slight rise, what you need to compare is this result with the last January's result. Okay, so this one, 0.2, is lower than this 0.3 reading. And from the year-on-year calculations, this one now is going to roll over. It's going to fall off the calculations. So now what you need to calculate is, what are these 11 plus this one going to be? So if all of these equal 2%, which it doesn't, it's a bit higher. So what is this? There's 1, 1.6, 1.9, 2.1, 2.3, 2.4, 2.7, 2.9, 3, 3.2. So it's looking at 3.2% for year on year, which is going to be a decrease from 3.3%. So inflation is coming down. The big one is going to be when this one falls off. As long as we don't get a shock in February's core PCE, we could have a big reduction for the next one when 0.6 falls out. So barring any surprises, inflation is coming down. So that's the only real news. That's the catalyst for today, for the New York session anyway. That's the catalyst. We're still in Fed blackout, so we're not expecting any Fed speakers to come on. You can see here there's no news, right? There's no news, but you still have people's talking. So this is Kazakhs from ECB, and basically he is just saying the exact same stuff that Christine Lagarde said. Like some of these quotes, ECB is data dependent, not date dependent. He's been told to say that for sure. But all of this stuff is the exact same things. It's been reiterated what was said in the press conference. So yeah, I'm really kind of stuck to see, apart from trading underneath New York 50%, if we're going to go bullish, then what we want to see is one of these support levels hold. So we need to see something hold so that can build a base and then start pushing up from. But it's not the biggest range either. So trading from here, 16,870, even up to here, 50 pips to 1923. Above here, yes, easy ideas. When we get above, breakout above here. Easy ideas if we can actually establish and break it down under here. Maybe we're part of this bigger range. Now, right now, we're in this like little top quadrant of this potential range. It's a little bit tricky. So I'm going to wait for London Open in 15 minutes and see if the price action can paint the picture a little bit clearer. Moving over to gold. Gold, we had wild whipsaw day. So kind of wish I just wish I was in something not German 40 yesterday, because that was really boring. The London session was boring. The New York session was boring. Gold, though, with employment figures coming out yesterday and GDP, we had what a wild move. Just this one candle alone was 140 pips in literally like 10 minutes. So this one candle, 5-minute candle, pushed 120, and then the next 5 minutes, 145 pips in two 5-minute candles. Much better. Should have been doing that. Okay. Now my ideas for gold is I am always more bullish on it. So we've got clear structure here. clear structure. So we've tested the base yesterday over an Asian session. We've tested it again. All we need is something to close inside, and then we've got a 100 pip move up to the upside. Clean candles, fair value gaps if you want to use that, order blocks if you want to use that. We just need to close above these wicks. So that should be an easy one. Easy one if that happens. I'm going to put a little alert here. See if price is testing it again. For the 1 hour. Now, if we don't close above here, Asian low could present a little bit of a problem. Could we come back down? I'd like to see a higher low above all of this area. If we can start to come down and build a support, I'd like to see it move back up again. So yeah, I'd really like to see something close inside of here. Or I don't really want to entertain sells myself, but I'd like to see some sort of support, some sort of wicks rejecting, failure to push lower, and then look to take it long, and then hopefully we can then close inside and then push up. Yeah, I think that's a good idea. Anytime we get into like 2000 or 2010s, we're getting followed with a strong reaction. NAS I'm not going to do. NAS can wait till New York session, because usually if you're trying to like, am I trying to anticipate what the move is going to be for Asian and London? Am I trying to anticipate these parts of the day, or am I trying to anticipate this part of the day? So for me, I'm trying to anticipate the New York session, but I'm trying to anticipate the New York session when I've got the Asian and the London session to use as a reference. So I don't mind what London session is going to do, because I'm not going to trade it anyway. So look at the size differences between London, the pinks. Now you compare that with German, and it's much more even. So this is why I'm doing German for London session, NAS for New York session. Thin black line is the daily open. Which pair? Is it the one that on gold? Gold. No, the thin black line is the HaydosFx. So keeping an eye on that. But it is very close to the daily open. Cool. All right. I'm going to open the floor up. What do you guys think? What's your plan today? Mm-hmm. Yeah. Hey, Tom. Yeah. Go for it. It's got to clear above these levels again. So it was very close. We need some catalyst. Yeah. So when you see these, like normally when you see these moves, like these really one-sided moves, then price needs to normalize. So, but once you're leaving this high again, yeah, then it's right there. But the market normally it's not like perfect. So normally when they're really building to make a run for it, a lot of the time it's going to be a bit of a consolidation, up and down. It's going to be a little bit messy price movement, but then once it's leaving, could retest and then it'll launch. But when it's building to go and make a new high, a lot of the time it starts with a little bit of consolidation or a bit messy price action, or it needs a catalyst like a strong news. And that news yesterday is interest rate decisions. It had the potential, but they were so just not really clear. Like it wasn't really pushing back on when they said, "Oh, what about rate cuts for before summer?" And it was just like you could almost fall asleep with the response. It was going into all this crazy stuff about not crazy stuff, but it just it was a very roundabout way of answering. And rather than it was a tone, there was just no like real pushbacks. It was snappy, like, no, we're not looking at rate cuts before then. It was well, they want to leave the options open at all times. So yeah. So when we when it starts leaving these areas, absolutely, because when you start leaving this high, there's that when we're up so high, these all-time highs, there's very little. There's very little in the way of like resistance that can be seen, apart from like these wick rejections. It would just be literally pushing up. So because we're seeing every time it's getting close to these highs, we've seen like big runs. So now that we're actually like, there's very few candles actually closing above these highs. So that's the key, is when you like even look at gold. Look at gold in how many like years we've had war, we've had COVID, we've had run ups to 2000. Like before, price had never hit 2000 before this time. And then when you start getting to these higher numbers, you do get these big spikes. Like that's a massive run, then a big correction, and then a massive run, then a big correction, then a massive run and a big correction. But we weren't really getting candles closing above key levels, and key level was 2000. When we finally did get a candle closing above, this is literally the first couple of days of that month that we got a massive run up. So what we really need in German for them to really push and really start to accelerate, we needed to see something close above a key level, and we got that. So now it's just it's on, even on the weekly, when you go down, where is it, weekly, if we can, when we're starting to get these rejections, if we can get this weekly candle close, I've got no doubt that we'll be seeing all-time high again in the very next couple of weeks. So it's really how today closes. I don't think that. I mean, we're within striking distance today of that all-time high. Whether we get it or not will depend on some news. But if we can get a weekly closure up here, then I'm definitely bullish next week. It might not close bullish, but you would expect that if we get a candle closing bullish on the weekly, we'll see a wick on the next week, something like that. Whether it closes bearish, we next week's got US interest rates, but I'm sure we'll get that all-time high next week. Okay, anyone else? What's your plan? Samuel, short sells possible during the London session on gold. Yeah, potentially. I mean, at the moment we're underneath that resistance. So whilst under that resistance, shorts are completely possible. Banuk's bearish on gold down to 2015. Awesome. Sell to buy. That's what you're looking at. Just annoyed that it took so long to move down here. So we've got a minute and a half. So this was the Frankfurt Open candle. Yeah, that's it. The Frankfurt Open candle. Pushed up, grabbed liquidity, and now we've been seeing liquidity candles. So creating like this little flag. Are we going to break underneath? Or are we going to launch back up? Joe, short for German 40. Who knows? FEG and daily 16. Yeah. It's overall I'm bullish. You got to be. You got to be. But where the initial move is, it's not very clear at all. It's like NAS's. NAS's dropped 0.66%. 113 pips already. So there is a correlation. But last night, German was stuck in that range and NAS was tumbling. So come on. It's really tight little consolidation here, isn't it? Okay, so this is the London Open candle. Yeah, that's true. Could be setting up for some longs here. There was your London high from yesterday. So already got liquidity from New York, 50%. Could we take a long up to here for the Asian high? I think so. Trap was set and they snared the seller. for this initial open. Oh yeah. Bloody German, man. They're lazy, aren't they? Everything was falling. German sat there as well. Have you got them all up on the same screen? Mm-hmm. Yeah, I can see that there's times it works for you, works, then others it works against you. Because if one moves you and the others aren't, you're like, oh man, look at that 5-minute candle. It's just really showing that ink, like just literally open where it closed where it opened. Oh, thanks, Rob. Yeah, if you guys can share the love, give the stream a like if you can. It really does help. Kind of just flick on more time frames here, just to try to get a bit more perspective. That's where I went wrong yesterday with with I'm gonna go to the hour on the bottom left. Where I went wrong yesterday with my trade that I had on. So I was really happy with the entry. I took a loss trying to get the entry, but then got the trade on here. And then as it pushed it down, I was looking to secure about here, but then price reacted inside of this hour candle, went up, came down, then went back up again, and I was just infatuated with the lower time frame at that point, and I was missing that it was reacting exactly where these hour candles had previously closed. So it's a good idea to constantly be reminded where you are in the bigger picture, not just expand like the small time frame and try trade it. Always see where you are in the hour, 30 minutes. Okay, so hours down the bottom, 15-minute is top left. I'll make this full screen Oh yeah, it gets a bit small. 5 minute is top right. And the 3 minute is going to be the bottom right. Oh, interesting. Niche. You're super short on pound yen. Thought yen was looking going to be weak today. Because I thought Aussie yen's going to be a decent option for longs. Yeah. Yeah, it's more the comments coming out of the yen. Like there were some more data came in that they basically reaffirming their ultra easy monetary policy. And Aussie typically does well when there's like better optimism in the markets. So I know it's like public holiday, so you would have actually like less volatility potentially in the Asian session, but we could see Aussie like do well. But I was looking at that yesterday as well. The Germans just reflecting what basically what Lagarde said. Nothing. So it'll be interesting to see what it does at this week, because this is your German Open. Okay. Now's the time. Push down, little test, came up, come down. Now if we can get something closing nice and strong, hopefully this is the time that we can push up, and I really want to move towards the Asian highs. Which is not a big move. Okay, let's go. Possible retrace come on the form. Let's look at the 4 minute. So it's not a very nice candle, but this is still potentially a rejection wick closing back above. So we really need to see some bullish candles. Nah, no good. Just going to do the wick fill. Man, it's been a slug. Yeah, I think I'm actually just I might even just navigate over to gold. While I was doing this, I'm quite unclear with where I want it to go. So that's a definite part, a definite possibility though. Trading like this part of the clean candle. But gold's not really moving either, so maybe we can get it to sell down to it. Jim, this is your idea. Yeah. Is that the London 50% as well? You're selling, Sarah. Okay, so let's keep an eye on this level then. If price does push down, London 50%, So we've seen some reactions from the London high. So can we also see some reactions from this area? That would line up with this liquidity candle. Yeah, I like that idea as well, actually. Let's plan that out. So I'm going to give it a go. So trade from here down, and then see if we can get that reaction from here. So it'd be nice if this candle can close below. Hey, Ronnie, why aren't you in the Zoom? $16.80 to $16.78 H1 30-minute bullish engulfing candles to buy from. Yeah, this one. Respecting the reaction to the NY 50% euro low also before overextending. You mean like if it bounces to come back up to this area? Mm-hmm. Cool. So we could get a little bit of a price action could stall just a little bit over here. This is technically a fair value gap on the 15-minute. Looking at this wick and this wick. But if we can continue to push through, I'm happy to keep selling this down. Oh, I see what you mean, Tom. Sorry. So you're talking about bouncing off of this. So if I redrew it, that line, you're looking at doing something like this before extending down. Sure. So a little 30-minute liquidity candle as well. That's bouncing off of. So depending how this 30-minute candle here can close, it'd be quite nice if this is closing as an engulfing candle, closing below the low, this low, leaving a little bit of a wick. Then max pullback would be like anywhere between this red zone and the opening of that candle. So kind of trying to visualize the next one potentially doing something like this. So max pullback is that I want is this level. It'll be nice if this candle can close underneath this wick as well. So we also don't want this to pull back too much. It's got less than 2 minutes left. Okay, so it's got some weight in here. If like to see these cells play out, getting a fairly clear idea though as well later on. If we can get some, whether this is liquidity grab or we start getting support built, if I can get a candle that closes back above here, then I'll take longs on the like a 30-minute candle. If I get a 30-minute candle that closes above this gray zone, then I'm looking to retarget Wednesday's high. This orange line. So whilst we stay underneath this gray zone, I'm comfortable looking for these sells. But once we close above it, I'll long until 1923. 16,923. For Pepperstone feed, that is. The level might be different on your own price feed. What was the gray zone? What was it like? What was I drawing it from? So this, see how we've got price set on it as a support here, and then it acted as resistance, and then as resistance, and then it closed above. Now it's a support, and then a support, closed below. Then in agent session, it was just seen to be a divider. So price is either closing it or above it, closing below it or above it. And then we rejected off of here, and this is an engulfing candle, this red one. So if we're breaking that engulfing candle and closing above it, then I think the most likely probability play is for a wick back into it, and then this time we fill this range. To me, that looks really clear. Hey Dave, do you have any trap? Mm-hmm. Mm-hmm. Yeah, you kind of don't want to be filled during the agent session on the Monday. Mm-hmm. Too many setups. Mm-hmm. Mm-hmm. Yeah, definitely. Gym sessions, not indicator, not showing. Yeah, that's for the group. He made that just for us. Pin 2. Okay, there's that reaction zone. I use MT5 as well, Tom. Yeah, that's really nice having all these different like a program like MT5 or I think C Trader. You can use a lot of trade assistance things on C Trader, or you got to go like specialized software where they do it. But at least with trading MetaTrader, a lot of people you can even write your own. Like one of the other students wrote his own. He was showing me the other day. Really good. Damn, man, this 30-minute. Coming all the way back here. Now, I was hoping for the 30-minute to close. But now it's still got another 20 minutes for this 30-minute candle to close. So do I go with the 15-minute closing? I think I might. So it needs to close though. 15-minute needs to close above this line. But what's annoying then is I'm opening the door for the next 15-minute to just give me the fake out, and then I've bought the wick. So what would be nice if it just rejects like this and then flips. That'd be the best scenario. It'd be good for the cells, and there'll be no doubt regarding that potential buy, and that leaves that buy ready for later on. I'd really like to take that buy after we've grabbed liquidity from underneath here. That'd be the best of both worlds. So this could have just like grabbed a lot of people. Hopefully this is a trap. So price came down, gave the fake out, which looked like a fake out. Price pushed up, broke the swing high, came down, created a little bit of a support. Price pushed up, bulk of people buying this point, and then price rejected on them, holding that trade, came back up. Early buyers get a chance to get out for break even, so they close. Now we've got a lovely 3-minute liquidity candle. And let's hope that this can hold and price can still make its way down, rejecting off of this gray zone again into this reaction zone, which is your London 50% from yesterday. And we've got a news liquidity candle on the lower time frame. This was the 1:30 p.m. UK time. And then we can see the reactions from here to build back up. That's what I'm hoping plays out. Oh, good one, man. Really good. Nice. The 10-minute candle, huh? Let's have a look at the 10-minute candle. Sitting on the Asia low. Oh, yeah. Yeah, this is the NY 50% as well. All right. Well, I kind of want to watch gold as well at the same time. So I need a screen back. So you know what that means. My YouTube people watching on HaydosFx, stay on. People watching on Trading Nut stream, I'm gonna have to close this one down. So come over to if you want to keep watching, go on to HaydosFx. Going to try Plano. At the moment, it's just going sideways. But you can hear others talking. Then you got background music too. So I'd recommend watching on there. Otherwise, if not, good luck. I'll see you later. But people watching on HaydosFx anyway, keep watching. We've still got some time.